Hello and welcome. You're watching Markets Today. I'm Sakshi Batra, and this is where we discuss all the action of the stock markets trade in today's trading action. Of course, we've seen another day of weakness for the markets today. What we have seen through this week is many days of very sharp fall coming in. This week, we've also witnessed the Nifty Bank and the mid cap index really slipping into the bear territory, down 20% from the all time high levels as well. So, first up, we'll understand what really happened today, and then we'll go into specifics of stocks and sectors that were the highlight of the trading session, and then what can we expect as we move forward into the new week as well. All of that coming up over the next 4 to 5 minutes, so do stay tuned onto with me. First up, let's look at today's action. Well, the Indian equity market, Sensex and Nifty, marked the sixth straight session of losses today, tracking the sustained sell off in the global markets. The rupee ended flat as the FII selling continued. There was a lot of fear among of about global recession as the central banks remained in a firefighting mode to tame the inflation as well. Remember, a day after closing at over 1 year low, the Sensex opened further lower and fought multiple bouts of volatility through the day. The Sensex finally closed 135 points or 0.25% lower in trade today to end the day at 51,360. So that 52,000 mark, the sacrosanct level, has been breached decisively yet again today. Nifty also slipped about 67 points or 0.4% in trade to end the day below 15,300 odd mark. So another pain point for the Nifty index as well. Also, sixth straight session of losses for both Sensex and the Nifty, and the second straight weekly loss as well for the markets and the benchmarks. On a weekly basis, we've seen that the Sensex lost about 2,900 points or 5.4% in trade. The Nifty has dropped over 900 points of almost 6% in trade as well. The Sensex loss was primarily today driven by some stocks like Titan, Wipro, Dr. Reddy's, Asian Paints, Sun Pharma, L&T, and Power Grid, who were all looking at shedding somewhere around 2.5 to 6 percentage points. Also, on the other hand, Bajaj Twins, Bajaj Finserv, and Bajaj Finance, Reliance Industries, ICICI Bank, HDFC Bank, and ITC emerged as the gainers. They were stemming the fall for the markets today. The broader markets, the small cap, the mid cap, definitely were on the in focus as well, and they however fell about 0.8% and 0.6%, so much deeper than the benchmarks as well. Also, when you talk about the oil and gas stocks, that plunged about 3% in trade. The other major losers were consumer durables that were down 2.7%. The energy index was down 2%. Power index was down 1.5%. And of the 19 sectoral indices, 15 indices really closed in the red when you talk about the Sensex indices. Rising inflation, policy tightening by the global central banks are forcing markets to discount the possibilities of a recession, with central banks' policy tone pointing towards continued rate hikes of a higher magnitude. We can actually expect FIIs to also maintain their selling spree. If that happens, the domestic markets will continue to trade with volatility in the near term, as most of the experts have been pointing out. Apart from this, in today's trading session, we did see some of the highlights from the financial markets as well. Globally, markets were also down amid worries of inflation and a possible recession. Asian markets ended lower, tracking massive slide on the Wall Street too. US equities had ended sharply lower last night. The futures will be important to watch out for, and tonight's session will be important to track as and when we move forward into the next trade. Crude oil prices, they also rose sharply on Friday, supported by the supply tightness and the new sanctions of Iran. But prices were on track for a weekly decline amidst the interest rate hikes and the major central banks as well. The Brent crude prices was up $1.13 or just 0.9% in trade to close the day above the $120 a barrel mark too. Bullion prices softened. Internationally, gold prices declined on Friday and was on pace to post a 1% fall for the week as well, dented by the strong dollar, the hawkish policy signals from the global central banks as well, and the recessionary fears also loom large. So that was the important factor. The Indian rupee ended flat, like I said, almost at 78.09 against the US dollar. So that also will be a factor to watch out for as we move forward from here into the next week or so. Most of the experts have been saying that at this point in time, the traders need to be very cautious of the trade in the stock markets. Say, for example, Kunal Shah, senior technical and derivative analyst at LKP Securities, did say that for the bank Nifty index, there is a support of 32,500. If that support gets held on to, then the pullback rally could pull the index to 33,500. However, the downside, if it is breached, fresh round of selling will happen, and 30,000 levels could also be seen on the Bank Nifty. So that's an important level to watch out for the Bank Nifty particularly. Apart from this, Ajit Mishra, who's the VP of Research at Religare Broking, also suggested that on the domestic front, COVID trend and the progress of monsoon will also be in focus. In case there is some positive news, there could be some kind of a bounce back from these levels in the markets as we move forward into the next week. Well, that is as far as the market wrap of the day is concerned. I'll keep you posted with everything that's passing on the street and all the news flows that will be important, impacting the markets in the next week as we move forward from here. So do stay tuned onto Business Today TV.